Hello all and welcome again in the series of lectures of financial accounting and analysis. I welcome you again for this session today. So we have been talking about the subsidiary books in the previous lectures. So we'll continue with the same topic. We have discussed a little bit about the cash book in the previous lecture. Now we'll continue with the cash book again and we'll solve the question based on that also. So let's first revise the concept of cash book and then we'll pursue the question for it. So let's take up the cash book first. As we know, cash book is a simple book of accounts where we record the transactions related to cash. That is what is being received in cash, what is being cash going out. Any financial transaction that is related to cash is recorded in the cash book. And let me tell you again that if we are recording the cash transactions in the cash book, we are not required to pass the journal entry for this, and also we are not required to prepare the ledger account for that. So this is reducing the two-step process with preparation of cash book. So let us take the types of cash book here. See, when we prepare the cash book, it is dependent upon the business that what type of cash book they want to prepare. That is of depending upon their usage and requirement. So in general, we have two types of cash book. One is the general cash book and other is the petty cash book. General cash book is recorded, giving you the record of all the cash transactions, and petty cash book is basically prepared when in a business in a day or in a fortnightly or quarterly or monthly basis, they have to record the very minor cash expenses. Daily recurring very minor cash expenses are recorded. Otherwise, all the cash related transactions are recorded in the general cash book. Going further with the general cash book can be of three types: single column, double column, triple column. See, there is no difference between the format of the cash book. It is only that how many amounts column the business requires in the cash book. The general format will remain the same. Only this single, double, or triple column cash book will differ in the number of amount column they have. Like in the single column, you have only one amount column. In the double column cash book, you have two amounts column. One may be related to cash entry, other may be related to bank transactions. And in the triple column, it can be cash column, it can be bank column, and the discount column also for the cash discounts which is being given or is being received by the business. So these are the three types of cash book that the business usually prepares. So let's come to the format for the cash book. As you can see, this format is having three amounts column, under rupees. And as we prepare the ledger account, in the same way we prepare the cash book also. The basic format remains the same. First is the date, then particulars, then amount, and it also has the debit and the credit column. So it is basically divided vertically into two halves. Left side is the debit side, right side is the credit side. Debit side records all the cash which is being received by the business, and credit side records all the cash which is being given by the business. So all the cash outgoings are, since as per the golden rule, we record all the cash outgoings under credit. As the real account rule says, debit what comes in, credit what goes out. So we record all the cash outgoings on the credit side, and we record all the cash incomings on the debit side. So as you can see here, there are three columns: discount, cash, and bank. So anything which occurs in through cash transaction is recorded in cash column. Any financial transaction that occurs with the bank transaction, that is recorded under bank column, and any sort of cash discount given by the business or received by the business will be accordingly recorded in the discount column. So this is the format of a three column cash book. And let me tell you again that the transactions recorded in the cash book should be done as per the sequence of its occurrence, or you can say in the chronological order of the date. So the transaction occurs when the transaction occurs, you have to record it then and there only as per the sequence of its occurrence, only as we used to record in the journal. So moving ahead with the small question, we'll take up a question here. first it says you have to, I have taken an illustration to make you the things clear. So we'll have the solution also along with this. It will make your concepts more clear. So first it says started business with an investment of 9,000. Started business with an investment of 9,000, that simply means the cash is coming into the business. So as I told you previously that the cash coming into the business is recorded on the debit side, cash outgoing will be recorded on the credit side. So you can see here debit and credit sides. Left is debit, right is credit. First is the date column, then the particulars column, discount, bank, cash. One more column you can see here is the ledger folio. Ledger folio is the reference number. As you remember, if I have told you what is ledger folio or the journal folio number when we were discussing journal and the ledger accounts. So since there is no nothing given as per the ledger folio number. So we will leave this column as it is. What is C written over here? We will be discussing this while we are solving the question. So under 1st July, first transaction, first cash received is through capital. So when we talk about the journal entry about this cash transaction, it would have been cash account debited to capital account. So we are writing in the cash book, we will be writing to capital account, because as the journal entry says cash account debited to capital account. So if we would have been preparing the ledger account, we would have written under the cash account, we would have written to capital account. So in the same way, in cash book also, we will be writing to capital account. It is nothing else but a sort of cash account, you can say, prepared as per the cash book format. So next entry is deposited in Bank of India 7,000 rupees on 2nd July. So see, 2nd July, you have deposited in Bank of India 7,000 rupees. Now see, the cash is going out of the business, and on the same way, simultaneously, there is certain cash which is coming into the business through bank also, right? So as the entry says, the cash is deposited in Bank of India. So cash is going to bank. So from the business, cash is going out. So we will see under credit side, you can see on July 2nd, cash is going out and it is going to bank. So the journal entry here would have been cash account debited to bank account, right? So, sorry, bank account debited to cash account. So cash is going out of the business and through bank, it is coming into the business. So the final entry under the cash book will be by bank, cash is going out to bank. So we will write by bank in the cash column, 7,000 is going out, and simultaneously on the debit side, we will write to cash. Cash is coming into the business and the bank account is receiving the cash. So bank balance is increasing by 7,000, and on the credit side, the cash balance is reducing by 7,000. So you can see against this, there is C written. C here means it is a contra entry. Contra entry simply means which is a single entry, single transaction, which is affecting both debit and the credit side of the cash book. So such type of transactions are called as a contra entry. Then next transaction is acquired a building by using a check of 5,000. This is the cash where cash is going out, through bank, and paid the bill of furniture by check 1,000 rupees. So both of these transactions are the outgoing cash transaction, and it is being done through bank. So see, you can see here 4th July buy building, since building is purchased, buy building 5,000, and then 10th July buy furniture 1,000. Both the items are recorded in the bank amount column because both transactions are done through bank. Then 15th July says purchase 800 of merchandise by check. 800 of merchandise by check means it is affecting the bank. So by purchases, you will write 800 rupees, as you can see here. Then next transaction, withdrew 100 rupees from bank. You have withdrawn 100 rupees from bank. So you can see here under credit side, by cash, you are receiving 100, you are withdrawing 100 rupees through bank, and it is again a contra entry because you are withdrawing 100 rupees from bank and you are receiving 100 rupees in the business. So on the same date, as you can see, 18 July, to bank, contra entry 100 rupees under the cash column. Then next entry is Sold merchandise for 1200. It is a sales entry. Through sales, the cash is coming into the business. So 1200 will be recorded on the debit side. Then deposited 2000 into the bank. So as you can see, cash 1200 receives to sales, and then it's a contra entry or 22nd to cash 2000 rupees. Cash is getting received through bank, and cash is going out of the business to bank 2000 rupees. Then next entry is bought 1000 rupees merchandise. So 1000 rupees merchandise is got purchased. So by purchases 1000 will appear on the credit side. Sold 1500 merchandise by cross check. So you can see here by purchases it will appear 1000 rupees, and to sales it will appear 1500. Then next is paid rupees 100 by check as the premium for ensuring building against fire 27th of July. So by insurance premium, you can see bank is getting affected with 100 rupees. Then next is paid freight 50 rupees. It is again a credit side entry. Buy freight 50 rupees. Withdrew from bank for personal use 500. So we can see here 28th of July, buy freight 50 rupees, and then withdrew from bank for personal use. Now see, bank the owner is withdrawing from bank for his personal use. So as I told you previously also, if anything is withdrawn from the business for the personal use, that will be considered as a technical term will be used for it, that is drawings. So by drawings on 30th July, there is an entry of 500 rupees under bank column because it is being withdrawn from bank. Then on 31st July, cleared electricity bill 90 rupees. So it would have been by electricity 90 rupees cash. Then next is paid to Mahesh 1080 in full satisfaction by check. We owed to Mahesh 1100 for goods purchased. So now it is the payment is being done to Mahesh. So by Mahesh, and since it is by check, so 1080 under the bank column. And since 1100 was the final amount due from Mahesh, to then discount received in this situation is 20 rupees, which have been entered into discount column. And the last entry here is received from Suresh a check for 1480 and full satisfaction of the debt of 1510. So received from Mahesh it is a debit side entry. So we will see to Suresh 1480, and as per the due amount 30 rupees discount is effective in this case. So it is 30 rupees under the discount column. Now we have transferred all the transactions in the cash book, and at the end, what we will do, as we usually balance the ledger accounts, in the same way we will balance the cash book here. So we have to add up all the debit side items and the credit side items. Now, since it is a cash book, so always there is a normal situation under the cash book is debit side balances are usually higher than the credit side balances, as debit side records all the receivings and credit side records all the payments. So usually it has to be there has to be some cash balance, and since the cash balance is there, so balance will always appear on the right side, on the credit side. So as you can see here, the debit side is higher and the credit side is lower, which means payments are less as compared to the receipts. So whatever is the amount of balance that we will mention here, as you can see here under the bank, it is 3400 balance, and in the cash account, cash column, it is 160 rupees. So we will put the balancing figure and we will put up the total at the end as we do in the ledger accounts for by the bank and the credit column. But there is a difference here for the discount column. In discount column, we usually do not balance the discount column. We just put up the total of both the debit and the credit side respectively in the last the total amount. Though we are not required to balance this discount column. We leave the discount column. We just total up all the discounts effective on the credit and the debit side and write the total at the end. That's it. We are not required to balance the discount column, but we are required to balance the bank account and bank column and the cash column here for the cash book. And whatever balance is there appearing on 31st July by balance CD, it will be further carried on to the next month to balance brought down under bank and the cash. So this is it from my side for the cash book. We'll meet again for the next few further topics. Till then, thank you and hope to see you all for the next session. Thank you all.